Hi friends, welcome to the channel JIB and CIB Made Simple. So if you are looking for the preparing for the CCP examination, and if you are looking for the questions which were asked on the examination of CCP conducted on 24th August, then you are at the right place, because in this video we will discuss all the types of case studies, all the types of important questions, 1 marks questions which were asked in the examination. Not only I will provide you the answer, I will explain why each and every option is incorrect and why option is correct, and through this question your concept will be clear. I will start from the basic level and move to the advanced level, so make sure that you understand each and every question. So try the question on your own first and then listen to the explanation. Have pen, paper, calculator with you, because we are going to discuss some numerical question also. So this was the first question. Similar question were asked in the examination. So let's get started. So friends, as you can see, we are given a loan account A1, okay, with balance outstanding of 3,75,040 rupees. As you can see, security available is 1,85,000, and the system classify NPA on 30th September 2019. It become NPA on 30th September 2019. So the question is, for loan account A1, we have to find that on 31st March 2021, right, under which category this account will fall and what provision is required, right? So these are the options that we have. Please check the option: substandard, D1, D2, loss asset. So friends, first of all, basics. So let me clear the basics of NPA category here. You know it very well. First 12 months after an account become NPA. So suppose this account become NPA here. So first 12 months it remained it remains substandard. In this region it remains substandard. After that it moves to D1 up to 1 year. It remained D1. From 1 year to 3 year, right? From up to 1 year, from 1 to 3 year, okay, it remained D2, and from after more than 3 year, it will become D3. And if the loan is completely hopeless and nothing can be recovered, it become loss, right? Now let's look at where A1 fall. Now you can think of like it has become NPA since 30 September 2019. Okay, now by 30 September 2020. By 30 September 2020, right, it has already completed 1 year as NPA. So it moved from substandard to doubtful. Now on 31st March 2021, it is still within the first year of doubtful, that is D1. So the category is D1. So this way you have to think. So first question answer is there, D1, yes. So the category is D1. Now the second part is provisioning. So what is the rule regarding provisioning? So it is normal provisioning, right? So substandard, remember, 15% normally, and if it is doubtful asset, remember, doubtful asset, different provisioning for secure portion and unsecured portion. So here I write secured and here I write unsecured, right? So what is the provisioning for secured portion? So 1525. Sorry, just wait a minute. Let me erase it. There is a trick also to remember it. If you want me to share the trick, you can join our Telegram channel. Link is provided in the description section. I have shared the separate trick video to remember the provisioning. So secure D1 provisioning is 25%. Secure D2 provisioning is 40%. Secure D3 provisioning is 100%. On unsecured portion 100%. Right. So now let's apply this concept. So on unsecured portion it is always 100% in both the three cases. Now let's apply this concept to this particular A1 category. Now you can see in the A1 category list how much is the loan outstanding. Here I am writing. So loan outstanding is 3,75,040, and how much security is available? So security available is 1,85,000. So this means secured portion is 1,85,000. How much is the unsecured portion? Very simple. 3,75,040 minus 1,85,000. So this will give us how much? 1,90,040, right? So now let's calculate the provisioning separately on the secured portion and unsecured portion. So let's look at the secured portion first. How much is the provisioning for secured portion? I already told you, for D1 category it is 25%. So calculate 25% of 1,85,000. How much would that be? So that will be 46,250. Now let's compute the provisioning on the unsecured portion. Very simple. Percent on the unsecured portion. So it is very simple to think about it. So 100% of what? 100% of 1,90,040. So that will be how much? 1,90,040. So total provisioning is how much? Total provisioning is, you can think easily, 46,250 plus 1,90,040. Sorry, 1,90,040. So that would be 2,36,290. Right. This is the total provisioning. So now account A1 is in D1 category and total provisioning is 2,36,290. So the correct option is option number B. So what we learned from this discussion is that, substandard means up to 12 months. After that, D1, D2, D3 depending on the time. And provisioning is the higher for the unsecured portion, lower percentage for secured portion depending on category. For this case, D1 is 25% on secured, D1 is 25% on secured and 100% on unsecured. Just now we have discussed. Right. Now friends, on the same data, one more question is asked. Let's have a look. So the question is asking you that we are told that this account belongs to micro. So now let's look at A2 account. Right. So let's look at the A2 account. So this one is the A2. Now the question is A2 belongs to, micro enterprise. It has a CGTMSE guarantee of 75%. So you can see, so that is the peculiarity of the question. You will be able to get every type of, get exposure to every type of question that is possible based on provisioning. And in the examination, 5 marks case study were there based on provisioning. So, the question is CGTMSE guarantee, they have given 75%. Now let's see which category this fall and how much provisioning we require. So we have to tell the same thing, how much provisioning is required and which category it fall. That is all the question is all about. Now recall the timeline of NPA. First 12 months substandard. This then move to doubtful. D1 up to 1 year. D2 up to 1 to 3 year. D3 more than 3 year. Now let's look at account number 2. So let's look at A2. You can see easily that date of classification of NPA is 30 June 2018. Right. So now think about it. 30 June 2018. You can think like this. So 30 June 2018 up to June 19. So June 19, it remains substandard. It remains substandard, right? So for 1 year, it remains substandard. And till June 20, it remain in D1. Now the question is asking which time? Let's have a look. So the question is asking you, basically, yes, 13 June 2022. So the question is asking you 13 June 2022. Okay. Now tell me on 30th June 2022, it will be in which category? So it will be in D2, right? It will be in D2. So the account is in D2 category. I hope this makes sense to you. So A2 account till 30th June 2022 is in D2 category. Now, after that provisioning is being asked, how much provisioning to be made? So let's do the calculation here. Calculation of provisioning for this loan A2 in the D2 category. Let's go through step by step calculation. So first of all, outstanding versus secured. Let's look at the data. How much is outstanding? How much is secured? Let's look at the data. So the first thing is loan outstanding. How much is the loan outstanding A2? You can see 8,40,000. So let's write down 8,40,000 is the outstanding amount. How much is the security available? Security available is 3,27,000. So 3,27,000 is the security available. Okay. Now friends, that means how much is the unsecured? So if you talk about the unsecured portion, it is a difference. 8,14,000 minus 3,27,000. That would be 5,13,000. So this much is the unsecured portion. Right. Is it clear? 5,13,000 is the unsecured portion. Now friends, we basically CGTMSE guarantee. Since this is a micro enterprise, so 75% of the unsecured portion, 75% of the unsecured portion is guaranteed by CGTMSE. So think of it like insurance. If the borrower does not pay, CGTMSE will pay the bank for 75% of that part. So out of 5,13,000 unsecured, how much is the 75%? So 3,84,600 is 75%. Right. So now how much is the remaining unsecured? How much is the remaining unsecured? So remaining unsecured is, you can think like this, 5,13,000 minus 3,84,600. That would be how much? 1,28,400. Right. So this is the unsecured portion. Now you apply provisioning norm for D2. Right. So you apply provisioning norm on the both. So first of all, on the secured portion, how much is the secured portion? You can see the secured portion is 3,27,000. This one was the secured 3,27,000. So 3,27,000 secured portion. How much is the provisioning? 40% D2. I think you know it. And on the unsecured portion, how much is the unsecured portion? 1,28,400. 1,28,400. Total provisioning is 100%. So what is 40% of 3,27,000? It is nothing but 1,30,800. And what is 100% of 1,28,400? It is nothing but 1,28,400. So if you add both of them, so let's add 1,30,800 plus 1,28,400. This would give us 2,59,200. So that is the total provisioning amount. So the final answer is 2,59,200. Let's look at the answer. Yes, 2,59,200. So what we learned from this discussion is that an account remains substandard for 12 months after becoming NPA. It becomes D2, D3, D2 and D1, D2 and D3 for next subsequent 1 year, 1 to 3 year and more than 3 year. Right. And I told you for doubtful provisioning is just very simple. Secured 25%, secured D2 it is 40% and secured D3 100% and unsecured for D1, D2, D3 always 100%. And one more point is that for micro and small unit, CGTMSE guarantee reduces the unsecured burden. So always deduct guarantee cover before calculating the provision. So friends, that's the beauty of this question. And if you want such kind of question for practice purpose, you can WhatsApp me on this particular number because we have full set of question available based on the past year memory based question. And this will surely help in the upcoming examination as it has been helpful to the aspirant. Many aspirants have cracked the examination using our CCP resource which is available on our app. App name is JIB and CIB made simple. So you can also get access to this premium content. Now friends, let's look at the third question. Very good question based on DP calculation. So the question is like this. Let's solve this cash credit DP question. Sanction limit is 500 lakh which is equivalent to 5 crore. Margin on stock is 25%. Margin on book debt is 30%. Closing stock is 4 crore or 400 lakh. Credit for purchases they have given 100 lakh. Book debt they have given 300 lakh. Question is asking for the DP for the day. Options are in front of your screen. So first of all, let's understand the basic. I already told you, I will clear every concept. Even if you don't know the basic of DP, let me clear it. So DP means drawing power. It is actual amount. It is basically actual amount a borrower can withdraw. So actual amount that borrower can withdraw based on the available security after applying the margin. Right. So basically when I say DP, it means actual amount that a borrower can withdraw based on available security after applying the margin. Now you may think that what is the meaning of margin? You might think, what is the meaning of margin? Margin means, bank is saying that we won't fund 100% of your stock or debtor. You must also bring some share. We won't fund 100% of your stock or debtor, right? You must also buy some share. So what is the meaning of DP? DP is the value of security available to the bank. Try to understand. Very, very important. Value of security available to bank minus margin, right? So DP is the actual amount a borrower can withdraw based on the available security after applying a margin. Margin means bank say that you must bring, I won't fund you 100% of your stock or debtor. You must bring some share, right? So max actual amount the borrower can withdraw based on the available security. Now for calculating DP, there are some steps which has to be followed. First of all, you have to calculate the paid stock. What is the meaning of paid stock? See, total stock, from total stock we remove the creditor because that portion is not financed by the borrower. Yes. So paid stock means from the total stock is how much? Total stock is 400 lakh. This is the total stock. And from that we subtract the creditor. Because creditor means udhar. Because this amount will not be financed by the borrower. That portion is not financed by the borrower. So how much we subtract? 400 minus 100. So 400 minus 100 will give us how much? That will give us 300 lakh. Okay. Now that is what we have calculated the paid stock. Second thing we will do, we calculate the bank value of stock. So before that we need to calculate the margin. So margin is how much? Let's look. So margin is 25% on a stock. You can clearly see. So margin is 25%. Okay. So bank take only 75%. So the bank value of a stock will be 75% of 300 lakh. That would give us 225 lakh. Now that is the bank value of a stock. What is the bank value of book debt? So book debt means receivable. Receivable means what? Receivable means some amount which is still left to be collected from the customer. So on that, that is applicable. Bank will finance that. But creditor will not be financed by the bank. So book value of the bank value of the book receivable will be how much? Very simple. You can see 300 lakh book debt is there. And as per the rule I told you that margins has to be applied 30%. On book debt, 30% margin to be applied. More margin is there on book debt. So 30% of 300 lakh would be how much? I think it is 90 lakh. So subtract that. So the bank value will be 300 minus 90, which would be 200 lakh. So that is the bank value of book debt. Now you add then. So from stock we have 225 lakh. From book debt we have 210 lakh. After addition they would give us 435 lakh. Now let's check the sanction. How much is the sanction amount? Sanction amount is 500 lakh. And DP we have calculated is 435 lakh. So bank allow the lower of the two. Either the sanction amount or the DP amount. Bank will allow the lower of the two. So obviously bank will allow 435 lakh. So 4.34 crore is the correct answer. So this is how we should go about solving such kind of problem. Remember, such question was asked in the recently held CCP examination. So why other are wrong? 500 lakh is wrong. This is just the sanction limit. 300 lakh is wrong because only paid up stock margin not calculated. So from this discussion, what we come to know, let's just summarize the key point for your understanding purpose. So remember, whenever question asks you to compute DP, whenever try to understand this concept, whenever question asks you to compute DP, so remember DP is the minimum of sanction amount or eligible amount. This is the formula, right? So for a stock, suppose it is a stock, so you should subtract the creditor. You should subtract the creditor and then apply margin. And if it is book debt, so you should apply margin directly, right? And add both of them to get final DP. I hope this makes sense to you. Now let's have a next question. So friends, basically the question is, which of the given statement are true about the exposure limit and the connected counterparty? So basically, why do RBI create this rule? To avoid concentration risk. Yes, the basic purpose is to avoid the concentration risk. That means banks should not put too many eggs in one basket. Right? If a single borrower or a group of borrowers fail, the whole bank should not collapse. That is the main role of this particular, concentration risk. So RBI fixes limit based on the bank tier 1 capital. Based on the bank tier 1 capital, RBI fixes the limit. Right? Now the question is, how much is the limit? Very, very important concept. Let's discuss it. So options are given like, exposure ceiling for a single counterparty is 20% of the bank tier 1 capital with an additional 5% allowed. B option says that exposure to a group of connected counterparties capped as 25% of tier 1 capital. C says that 2 or more persons are considered a group of connected counterparty if there is either control relationship. D says that economic interdependency implies that financial trouble of one counterparty is likely to cause difficulty for other in meeting obligation. And E say all of the above. So very important conceptual question. So remember the limits. What are the limits? Let's have a look. So limits are like this. For a single borrower or single counterparty, maximum exposure is 20% of tier 1 capital for single borrower. In a special case, with board approval, it can go up to 25%. So remember, for a single borrower, maximum exposure is 20% of tier 1 capital. And in a special case, it can go up to 25%. For a group of connected borrower, connected counterparty, like related or contingent, in that case, limit is 25% of tier 1 capital. For group of connected party, it is 25% of tier 1 capital. Now the question is, what is the meaning of this connected counterparty? See, there are two tests. One test is called control test. What is control test? It says that if one person or if one company controls the other, like a parent-subsidiary relationship, that is called connected counterparty. And the second test is called economic interdependence. Economic interdependence, which means, even if there is no control, if one party financial problem can create problem for another, they are called connected. For example, suppose company A is the only buyer of company B goods. So if A goes bankrupt, we will also struggle. That is called economic interdependence. So now think about it. Which option do you think is correct? So obviously option number A is also correct because it says 20% for bank tier 1 capital with an additional provision of 5%. Yes, 25% is there for So remember the limit. So the answer to this question is option number E, all of the above. Now friends, the next question is on your screen. Very good question it is. This question pertains to PMEGP scheme. PMEGP is the Prime Minister Employment Generation Program. The question asks, what is the maximum turnaround time, we call it TAT, for the disposing loan application under this scheme? Right, above 5 lakh and up to 5 lakh. So let's understand the basic of PMEGP. Basically PMEGP is a government scheme to support people who want to start micro and small enterprise. So people who want to start micro and small enterprise, for them, PMEGP scheme is there. Now, since it is meant to help a small business quickly, the government has also a clear timeline for bank to process application. So what is the guideline for TAT or turnaround time? See, if the loan amount is less than 5 lakh, okay, so bank must decide within 15 days. It must be decided within 15 days. And suppose the loan amount is above 5 lakh, in that case, decision must be given within 30 days. So the idea is simple. A smaller loan should be processed faster because a small entrepreneur need fund urgently. Now let's look at the option. Option A say 30 day for loan above 5 lakh, 15 day for loan up to 5 lakh. Yes, it is correct. Option B say 15 day for all the loan amount. No, that is wrong. C say 45 day and 30 days. Again wrong. D say no specific TAT, it again wrong. So remember, PMEGP help promote micro and small enterprise. And if we talk about the loan disposal timeline, it is very simple. The loan disposal timeline is very simple, right? So it says that up to 5 lakh, it is 15 days. Remember, 15 days up to 5 lakh, right? And above 5 lakh, it is 30 days, right? So that is the timeline. And you know it very well. Faster processing means quicker support for entrepreneur. So if processing is faster, it means, quicker support. That is the basic thing, right? So the correct answer to this question is option number A. Now friends, let's look at the next question that we have. So this one was regarding the PMEGP scheme. So this question is pertaining to willful defaulter as per the RBI guideline. So the question say, which of the following situation may result in a company being classified like a willful defaulter? Options are, the company has defaulted on loan repayment even though it has ability to pay. Option B, the company has used fund from the bank for processes other than what they were sanctioned for. Option C, company has siphoned off the fund so they are neither used for the intended purpose nor are available as asset. Option D, company has disposed of or removed asset placed as security for the loan. And option E, all of the above. So first of all, let's try to understand what is normal default. What is normal default? So normal default means borrower is genuinely unable to pay because of financial stress. Genuinely he is unable to pay. And what is willful default? So when I say willful default, it means borrower can pay but chooses not to pay. Or misuse the bank money. So willful default is all about intention and misuse. It's all about intention. It's all about misuse. Right. Now friends, let's look at this situation under RBI definition. So the first thing is that default despite ability to pay. This is the first case. Right. Default despite ability. So which means the company has enough money but does not repay. That is the case of willful default. Second case is diversion of fund. You know what is the meaning of diversion of fund? It simply means that using bank loan for something else. For example, loan taken for factory setup but money used to buy luxury car. And the third thing is called siphoning of fund. Please remember these three criteria. All these three comes under willful default. What is the meaning of siphoning of fund? So it means money is taken out in such a way that it is neither used for the project nor available as an asset. For example, suppose you took the loan taken but funds secretly transferred abroad. And the fourth case is disposal of secured asset. Very, very important. Disposal of secured asset. So what it means, selling or removing asset placed to the bank without informing. Like machinery given as a collateral but quietly sold off. So all these four cases clearly indicate, willful default. So these are the red flag. Now check the option. Option number A say defaulted with the ability to pay. Yes, this is the clear definition of willful default. Option number B say the company has used the fund from the bank for the purpose other than, this is called diversion of fund. Yes, this is also another one case. C say company has siphoned off the funds, so never, okay, this is all siphoning. Yes, this is all the condition. And D say company has disposed of, remove of asset. Yes, this is also the condition. So E is the correct answer. Right. So remember, what we learned from this question is that willful default means deliberate wrongdoing, not genuine inability. Four main reason I told you. First of all, not paying despite ability. B number I told you, diversion. C number I told you, siphoning. D number I told you, selling the asset or removing the secured asset. I hope that makes sense to you. Now friends, let's look at this very interesting question presented before you. The company reported an annual turnover of rupees 42 crore in the previous financial year. So the question is, how will this company be categorized under MSME norms? Right, micro, small, medium, not as MSME. Think about it. So based on the MSME classification, earlier MSME were based on investment in plant and machinery, but now they are classified based on turnover. So what is the rule? So it is very simple. Draw this timeline. Write down 5 crore. Write down 50 crore, and write down there 250 crore. See, very simple. Micro enterprise means turnover up to this so turnover. So turnover up to 5 crore is micro. From 5 to 50 it is. So what do you think? Which option do you think is correct? So now in this case, turnover is given 42 crore. So it is more than 5 crore but less than 50 crore. So it falls in the small enterprise category. Right. So I think this is the one easy one. So you must know the criteria of turnover. You must know it. Then you can easily answer this question. Okay. Now friends, let's look at the next question. So the next question says that as per the latest rule, what is the maximum number of partner allowed in a partnership firm in India? Right. Very, very important. So let's first understand what a partnership firm is. Partnership firm is simply a business where two or more people come together to run a business and to share the profit. But there must be a limit on how many people can join a partnership firm, right? So earlier the limit used to be 20 partner. Fine. And in a banking business, just 10 partner. Earlier the limit used to be 20 partner in general, and in the banking business, it used to be only 10 partner. But in 2014, what happened? That company rule, the government updated it. The latest rule says that maximum number of partner in a partnership firm can be 50. 50 is the maximum number of partner in the partnership firm. That means you can start a partnership with 2, 5, 10, even 49 people. But once you touch 51, you cannot remain a partnership. You will need to register as a company. So the answer to this question is 50. So remember, partnership firm is 2 or more person running a business together. Earlier limit was 20 or 10 for banking, but now the maximum per partner law is 50. Now the question is very good regarding the RBI Gold Card scheme, right? So friends, which of the following is to be eligible for the RBI Gold Card scheme? Exporter with a minimum 3-year track record, continuously classified as standard asset with no adverse future. B. Exporter blacklisted by the CGTMSE. C. Exporter have a loss of at last 3 years. D. Exporter on RBI defaulter list. So first let's understand what is this RBI Gold Card scheme. They think of it like a special membership card for exporter. If you are genuine and consistent exporter with a clean record, the bank give you faster and easier access to credit facility. Basically, it is like being a priority customer for bank when it comes to export finance. Yes, you are a priority customer. Now let's look at the option one by one. Option number A says that exporter with at least 3 years of good track record with account always standard. Yes, this sounds good, like a perfect candidate for the gold card export. What about B? See, B says exporter blacklisted by ECGC. You know what is ECGC? Export Credit Guarantee Corporation. So B number says that exporter blacklisted. Now option number B says that exporter blacklisted by ECGC. So yes, that is also correct. If you are on RBI defaulter list, right? So if you talk about the B, if you are blacklisted, obviously you won't be given a golden card, right? What about option C? Bank want healthy business, not one running in continuous loss. So option number C is also not eligible. What about D? D is the defaulter risk. So if you are an RBI default risk, it means you have already failed to repay the loan. Now, no way you will get the gold card. So option number D is also wrong. Right. So that is the point. So continuous loss. Right answer is option number A. Now friends, let's look at the next question. Which of the following is not a benefit provided under the gold card scheme for exporter? Again, one question from gold card. Right. So you can think of it like this. If you are a regular exporter who have a good track record, the bank give you a VIP pass. The VIP pass is called gold card. And just like any VIP card, it comes with some special benefit like preference in granting packing credit and term loan in the foreign currency. Loan sanctioned with an in principle limit valid for 3 years with automatically renewable. C says higher processing charge compared to other exporter. D say a standby credit limit of at least 20% of the assets limit for urgent credit requirement. So friends, first of all, option number A, benefit. Preference in loan. Yes, preference in loan, which means, that means if you need packing credit or a foreign currency loan, try to understand. If you need packing credit or if you need foreign currency loan, right, in that case, the bank will prioritize you. Basically, you don't have to wait in the long line. No need to wait in long line. That is the point. Second case is loan sanction for 3 years. Not just that, it comes with automatic renewal facility. Yes, automatic renewal facility is there. So exporter don't have to go through the headache of reapplying again and again. Option C, bank give you a standby credit limit. Yes, at least 20% extra than your assets limit. Why? Because sometimes exporter need urgent money and this standby limit work like an emergency fund. Yes, you get a standby limit. Yes, this is also one benefit. Right. What is the second benefit? Loan sanction for 3 years. But here is a trick part of the question. One option say higher processing charge. That is the wrong. Basically, now tell me, will a VIP pass holder ever be charged extra? Of course not. In fact, gold card exporter enjoy lower processing charge as compared to the others. That's why option number C is the correct answer. So remember, gold card is like a VIP pass for exporter with good track record. Benefit is that they get priority in loan, 3-year sanction with auto renewal, a standby credit of 20%. Charges are lower, not higher. I hope that makes sense to you. Now, one more question is that regarding the IRR. So let's tackle a very popular finance concept that is called internal rate of return. Don't worry if this sounds technical, I will explain it. Is super simple. Imagine this, you invested 10,000 rupees today in return in a project. In return, this project give you back 4,000 rupees after 1 year, 5,000 rupees after 2 years, 6,000 rupees after 3 years. Now the big question is this project profitable enough? So that is where IRR comes into picture. IRR is simply the rate of return at which the project net present value becomes zero. In plain English we say it is the interest rate at which money you put in equal to the money you get back in today's value. So the formula is 0 is equal to, so you calculate the present value of all these inflow. So you can think of like this. Today we have invested 10,000 rupees. Okay. And after 1 year, 4,000 you get as cash. After 2 years, 5,000. After 3 years, 6,000. You calculate what is the present value of this 4,000. How do you go about calculating it? So 4,000 divided by 1 plus r whole to the power n. Similarly, 5,000 divided by 1 plus r whole to, what is r? R here is, rate of interest. So what is the rate of interest? That is what we have to calculate. We don't know the IRR. Yes. And similarly 6,000. So here power will be 1, power will be 2 and 6,000 upon 1 plus r to the power 3. Right. And now, so that will give us the present value of all the cash flow. Let me write it down. So 4,000 upon 1 plus r plus 5,000 upon 1 plus r square plus 6,000 upon 1 plus r to the power 3. Now that is our present value of all this cash flow. And what we have to do? So these are, these are the positive cash flow that we are receiving. And how much is the negative cash flow? 10,000. So this is the net cash flow, net present value. And that has to be equated to 0. So where R is the IRR. How to find this R? So the best method is to put the value from the option. So first start with 15%. Just put R is equal to 15% and just see whether LHS is equal to RHS or not. This is the best way to calculate the IRR using the option. Using the option method is the best one. Otherwise, you have to use a high profile calculator. That is not advisable here because of the time constraint. You don't have that much time. So put the option in this equation and you will get the answer. Right. So the final answer we are getting is 18%. So IRR is the rate at which our NPV is equal to 0. You can think of it as the true return of your investment. So friends, let's end our discussion here. There are more questions. If you want me to bring the part 2 video of this, please write yes in the comment section. Also, if you want to avail such kind of content in the form of PDF, videos, mock test, in the form of previous year questions,